Hello guys, welcome to Top Forex channel once again. You have me on your screen right now. It's been a long time, but not so long anyway. So I'm here today to bring a good thing to your table, thing that can change things around or that can make things to makes more senses. So the thing is it has become the song to most of the trader of this era. It's about liquidity. So people understand it and they are using it to their way to make good things from the market. And liquidity is still be a problem for some of us. And a lot of things comes under liquidity. So that's why I come like to do the video again today to analyze a little thing I know about liquidity. And maybe if you quite understand, go along with me, and then you can use it along with your normal strategy, or you want to form strategy for around it, which is very, very quite possible. So let us talk about liquidity. Liquidity is money. Liquidity is money. And who has the money? It's us. So we are the liquidity. People are the liquidity, which is money. So let us see where liquidity now majorly be rested. Let's say where liquidity will be mainly be on any peer chart, on any market or anything at all. Has to be the beginning of the day and the close of the day, beginning of the week, close of the week, beginning of the month, close of the month. So what I'm saying that every day you want to come to market, say you want to trade. Remember that day, the major liquidity area you have that day as a day trader is the previous day high, previous day low. So any other movement inside previous day low, they are liquidity too. Everywhere in market is liquidity. In fact, I have to break that to you. Every buy and selling area are liquidity, but the high and the low of a day is where major liquidity rested. So just keep your mind that the high of the previous day and the previous day low, these are the liquidity area for today. So market need to drive to either of the side based on the major trends. So what I mean is that let us do some sketch before we go to charts. So say this is a high and a low of a particular pair, a market move. So, and this is the let us say this is the high and the low of a previous day. So market closed there. Market closed there. So let me do it so you can see. Now we want to trade today. So one thing I want you to understand is you say, I don't want what is the liquidity for today now? Know that the major liquidity for today that you want to trade is this high and this low. So any movement happen in here, they are liquidity as well, but they are minor liquidity. So to keep this thing easy for yourself, just know this is the liquidity where market is targeted for that day. The high or the low, it depends on the trend. We're not talking about trend. We're talking how market distributes based on the daily liquidity and weekly liquidity or monthly and so on and so forth. Know that the high and the low are the major liquidity for today. So all you have to do is that maybe follow the trend. If market is bullish on the higher time frame than what you are using right now, then be looking for selling opportunity, taking the low, or if market is in bullish other hand, be looking for. So I'm not showing you how you're going to look for trade. I'm just showing you how they distribute it on a normal way, a lot of way. So basically market open in that area. So like this, market just create some. So market do this. So market come back, take some little pullback. There's a lot of pullback that are going to be here as a liquidity of the previous day. And market change character to down. So it seems that market is respecting the previous day low. It's respecting this previous day low. So the next focus is the previous day high. Because the two areas are the major liquidity for that day. Market cannot be dancing. They can do that for some days. We're going to do the example as well. So once market respect on this side, then this side must be in soup. So definitely maybe based on the trend, this is how it happens. So this now be target. And in another scenario, market can open, market open this way, just go up a little also, market then support the high, also taking the low. So what I mean that market can drive up to the previous day high, take some liquidity along the way, all those inner liquidity. As I said, we all those one are using for entry. So that they are using for entry, but the target for a day or the low is either the high or the day of the low. So the scenario, if we look for buy here, market supports the previous day low, then target the previous day high. It's very, very, very common. Very, very common. And in some scenario, we can have a high and a low like this. So we have movement like that, the same thing. So market close there. So this is the high and this is the low of the day. Remember, these are the liquidity for that day for you, where you are targeting or where you are expecting market to take before you go into trade, or where you are targeting, depending on what your plan. But just know that this high and this low are the liquidity for that day. So stop stressing yourself as, I don't know where liquidity is rested. I'm trying to avoid liquidity. These are the liquidity for that day, the high and the low. Now, in another scenario, how they distribute this kind of stuff. So let's say market open here also and do the same thing. Market now respects the low of the previous day right there. So means you are buying from here and you are targeting the high of that day. So market been doing this, go up. So it's very tiny most, so I have to. So, and again, market do the same thing that it happens here above here. So it's telling you that it's also respecting the high of that day as well. So we think that looking for sell also won't be a bad thing. So in this scenario, it's now become what? Become a very good fight between the seller and the buyer. So market can do this for the whole day, selling and buy in between the previous day. So sometimes they do this. So we all know. So see this one, they came to the low of the day, they support it, they take the high, they go to the high of the previous day, support it, they take the low, because these two areas are the liquidity for that day. No other places for you to be putting your stressing yourself about. Stressing yourself about. Sometimes if you know what market is actually doing, market is going down, you can just be market in the 50%, put your entry on 50% of a previous day, and put your stop loss above, and target the low. If you know about the trend, it's possible. If you don't want to stress yourself about all this movement, just put your entry in the 50% of the previous day and put your stop loss above. It can be 1:2, can be 1:3 target sometimes. So, and you know that this is where market is going to today. I just want to save your stress from stress of finding inner liquidity market must stay before you do something. So, but assume that you are ready to do the work, no problem. Market support the low, now support the high. So the fight is between this high and this low. You can be in this trade, it's possible, or you can just hold one because of the major trend, which I'm not talking about. I'm just showing you how market distributes. And not only that way, there's another way market distributes from one liquidity to the others on a daily. So let's say we have the high here again. Let me draw the thing. I hope you are following me and are enjoying the classes so far. Please, I would like you if you can open up about my explanation if it's too shallow or anything you think it is, I can adjust. So let's say this our market close as well. So we have a scenario of market respect the low, take the high, market respect the high, take the low, market respect the high, respect the low, and it now become a battle between you, seller and buyer. And now another scenario distributes from one liquidity to the others is sometimes market will do this and sweep this low on the time frame you are using to trade. Sweep, not broken down. They will sweep here and come back inside to take those inner liquidity again, then now sell down again to complete. So they do this. Oh, sorry. Where am I going to? Where am I going to? Okay. So they can just sweep here in the sweep, then now they will drive back inside to claim all those liquidity again. Now break it completely. Yes, sometimes they distribute that way. And other scenario, when market opens here, it could just go up, little sweep here, liquidity sweep, then come back inside, do some liquidity taking again, and finally break it above. Yes, they do that. They sweep it first, come back inside, take more liquidity inside, now break it out completely. Yes, market distribute that way as well. But it's not about market distribute I'm talking about. It's about for you to know that this high and this low are the liquidity. If market can take care and chase another daily also is possible. And the last one that I understand the way the market distributes from one liquidity to the others is this. So this is the last one I have for you guys. So just find a way that the one that matches your strategy or the way you can form a strategy along. So I always see that I do the very also the selling same thing, just the high and the low. It doesn't discriminate. So in this scenario, it is the last one. So let us say the market just open here, some work here, then market break out. When market break out completely, now come back to the breakout. You now use, this is selling now. You now use it as a support. Do some dirty work, continue. And also, it can open in the morning, do some days, break it above, come back as a now buy as a support, do some dirty work, then continue. So you can see sometimes it can break out and use it as a support and use it as a resistance to continue the trend. Sometimes they can sweep it, come back inside, take more inner liquidity, break it out of the guide, do the same thing on the buy side. And also, market can support the low of the previous day, and market can also support the previous day high. It now become the battle between the buyer and the seller for that day. So the person who's going to win is going to be the trend. The trend is going to win all the time. So in this scenario, market can come back to the previous day low and take the high easily, come back to the previous day high and take the low easily. Just know that the high and the low, they are the liquidity for you for that day. Stop stressing yourself about where is the liquidity for today, where is the liquidity. The high and the low of the day, they are the superb liquidity for that day. So before we can just do one or two examples. So in this scenario, I will not analyze this chart like no for me to understand the trend. I don't want to talk about trend. I don't want to talk, I don't know where market is trading to. I don't want to see how market distributes from one day, from one low to the high or previous day, how they take it out, how they distribute inside. See how that four movement that we show there, how they actually work on how market distributes it. And before we do this, always remember this thing that this business only has two things from us. It's actually one thing, but that thing we need something. So that thing is what we're going to use on this the next step we are going now, which is we're going to have something called consistency. What do you think this market need from us? What I know that this business need from you, from me, from everyone that is interested in this business is one thing. Can you do one thing 1,000 times? Can you do this today, the same thing tomorrow? No changes. Don't do two things. So the business telling others, can you do one thing every day? Or every time you want to do it, it's the same thing. So once you able, let's say, can you do one thing 100 times in the market, not any other way around, or vice versa, like very near one thing, one single thing every day? Can you be doing it for like 100? If you do it like 100 and you are risking the same thing, like risking 1%, targeting 2% or 3%, and you are doing one thing for 100 times, you're going to make money. In fact, you're going to be a millionaire. You're going to be more than what you expect to be. Because that's it. That is what this thing means from us. It's telling us that, can you do one thing all the time? It doesn't matter you win today. You can lose 5 in a row, but don't change this fucking thing. Keep doing it. Do it 1,000 times. Do it any 1,000 times. Then you will see that this is the sacrifice that this business is expecting from you and I. Is by doing one thing all the time. And before you can do one thing at all time, then you need discipline. Then you need discipline, self-discipline, self-discipline, self-understanding. That is why they said psychology, it requires all this. Yes, yes. If you have a good money management, but what this business doesn't care about, you have money management or whatever, which is you need to. But is can you do one thing all the time? If you can do it, trust me, let just try it for 6 months. Do one thing for 6 months and come and tell me what will come after it. So what I'm saying is that let us do some example. I will not analyze this high time frame. I just want to see how market distributes. So what I'm saying is that the high and the low are the liquidity place. So what I'm saying now is that all this high of this any day that was rested, all those high, they are liquidity. These are the major liquidity area for you to understand that this where are the liquidity rested. Like all this low was rested here before. They are the where the major liquidity sits. You understand me? So I'm just going to do it very simple, maybe 2 or 3 examples. You cannot catch it all. So why I said the market need this thing for us is because you can do it today and not work today. Doesn't mean tomorrow will not work or you should change it or like, oh, you understand what I mean by not consistency is very bad for this business. So let me just close this. We all know that those high, they are the liquidity and the low are the liquidity. So this is the high of this day and this is the close. I don't know which day it is. Maybe it's like Thursday of 1 week. So means we want to see how market react from inside here, this previous day low and high. So this is daily. Why I will not use 4 hour is good. 4 hour is good for like a breakout kind of way. And 1 hour is too tight. 1 hour is too tight. And 15 minutes is quite good, not too tight and not too spread. 5 minutes is too spread, too much information. 15 minutes is kind of not too tight and not too spread. 1 hour is too tight. So let us use like 15 minutes for see how market distributes from one liquidity to the other. That means from one low of the day to the high of the day. So let me put my glass up here so we can see together. All right. So this is the high of the day and this is the low of the day that we want to use to trade with. Means this liquidity area where market is driving to. So and if you can see, this is a day separation. I already have it here. So when market opened here, you could say make little here, down, break it above, just like change of character. So what did it come to do that area? Maybe came to take this low as well as all this one is minor liquidity. This is the major liquidity. You are not the one that says market should take this area and do what? And change character to the other side. You are not the one who says it. Market do it itself. So in this scenario, it seems like market is respecting this low for today, means we are looking for, so like I said, I'm not they out to be in the market here. So we are looking for buy targeting high. So that it is. But remember, as it's going, it can get to any point here also and change character. But since the entry right here, market do not change character towards selling. If you change character like this up, of course, why not selling can have too? But nothing like that happens. So it means market supports the previous day low. Now this area is the target. So all this inner one, you can use it for your own advantage of taking TP or half TP, whatever. But this is the major liquid area market is driving to. So most of the time, market cannot get there and sell down and take the low. That is That is about trend. We are not talking about trend. So I don't need to go back to a previous day daily chart so we can see. So now today closed here, closed here. So this is the high and the low of today. We use this one for this one. Now I want to use this previous day for today. So this is the high and this is the low. So once you open your chart, you know that today this is my liquidity area, this is my liquidity area. That is what you quite understand, which is make it simple for you. All you have to know is the trend where market is going on a higher time frame, which you are not doing here. We just want to see how market distributes. So what happens here when markets break out here, right? Break out of this place. Then it comes here. So in this scenario, you'll be expecting market to do some dirty work to use it as a what? As a support to go up. But why it did not do that is because you remember every high of previous, the early day it is that is rested. Remember you were targeting this high yesterday before, but market did not go there yet. So maybe you hold your trade until markets finally take it early when markets open. So market sweep that high and market break out of this previous day high. So let us say there was no previous day high here. It was just all those inner liquidity, and you believe in this bullish. Maybe the bullish is the higher time frame discussion. Then you can use this breakout as a support to looking for more trade. For this scenario, there's a liquidity sweep on previous day high, and remember the concept. Anytime market sweep or previous day or any day high that we see on one leg, majorly of the time market is trying to come back inside to break it completely. But today, what we want to do today is that now we know that we cannot use here as a support because of the previous day was sweep happening here. So it's quite simple for us to wait for the change of character from this area to up, then you can buy, or you can just look for sell for that day if market is giving a chance to. So that is how that one went. So we now have this high now, and we have this high and this low. So forget about what happened yesterday because we are not actually trading. Of course, if you are trading, we can be monetizing all this area, but we are not. So we are just seeing how market distributes from one day to another. So we have another high of the day, low of here, which is a liquidity for you today. Now, when market open, do same thing it used to do, came down to the previous day low, claim some liquidity as used to do maybe sometimes or not time. Then you do again, change character to other side again. Means that, okay, market is respecting the low for that day. So market is respecting the low for that day. And when market respects here, doesn't market cannot respect here as well. But if you remember, you have a concept yesterday. You do not buy yesterday because of a sweep that happens here. So because you have another concept that the market just come back to claim liquidity and change character. So that one should be in the back of your head. Now, this confirmation that we can change the high of the day now as a liquidity for that today. But in this scenario, market can change character towards down. So when you were expecting market to come here for your entry, that is a good area. I'm not sure. Maybe I can show the entry for this area alone. I don't want to talk about entry at all, just to show how market distributes for one liquid to the others. So this concept that you want to buy from here, okay, which is good. And which is selling can also happen, which is market come back here. Actually, you could see a change of character from up to down here, but you cannot use this area. Why? Because market did not claim any liquid that was rested here. So it just mitigate a place which is not quite convincing enough. And before market come to this buy, what do? You could say market claim another high. So which means the market can respect this high also and change of character happen. The same thing that happens here, that wants to make you to buy, also to make you to sell here. No question asked. You shouldn't. But what's going to save you is the concept of there's a day that will sweep here. The market need to come back to claim more liquidity. And you could see that the change of character happens here. The change of character you are supposed to maybe see yesterday for you to buy more, but you did not see that. That is why you sold off. That's why you sell market yesterday. But now the change of character has complete. So definitely it's going to be the thing that's going to save you from not selling here. If not, you have the concept that a high of the previous day was sweep here and you're expecting another change of character to break it completely, then you'll be chasing another sell here, another buy here. It will now become what? Now become the battle from the seller and the buyer, which is possible 100%. But just showing you how market distribute. Know that this is the liquidity and this is the liquidity. And when market got here, being your entry. So I said I want to talk about entry. So it doesn't matter any strategy you are using. Just know where the liquidity rested for that day. So in this scenario, if you are using SMC, if you are using SMC, it means market was selling before and market change character to other side right here. So market change character to other side. Then you can use this one as your inducement and find any unmitigated order block. It can be flip, it can be breakout block, it can be fair value gap. Just know that this is going to be your inducement. So inducement, SMC call it inducement. So that is for SMC entry. There's a change of character here for you to look for buy now. Then you expect market to create inducement, which is right here. Then find unmitigated order block. Let us say support and resistance. Support and resistance. You could see that this area has a quite history of being a resistance here, breakout, being a support, breakout, resistance little, now breakout. So why not be a support now? Why not be a support now? If you actually understand where the trend is going to, trend is the only thing that's going to help you in this scenario by looking for buy here. And that's for support and resistance, and this for SMC trader. And what about a trend line? I did a video about that. I said, if you are trend line, if looking for buy or looking for sell, it's not a bad thing. For me, if I want to trade trend line, I'm looking for buy. If I have like 1, 2, 3 touches, I'll allow market to claim the last touches and find anything that is good in between the second one, any fair value gap between the second touch, then I'll look for buy. So you could see the trend line, 1, 2, 3 touch, market goes like it's ready to support here, but he needs to take it. Then take the last one touch, find anything in between here, fair value gap, or mitigate order block, and buy. An SMC change of character inducement by break support and resistance, a breakout, support breakout, but now it needs just a fresh breakout, breaking out, create some liquidity here, now come back. So they could be a very, very good confusing. Let us say this one already came back before and go. Maybe you can say it's not that strong anymore, but it created this as liquidity as well. So which is make it very good. So before let us find one more example, but not about entry, just about so thank you. So this is how the day closed. So don't forget our topic here. It's not about getting a trade. It's about understand how market distributes from one liquidity to the other. Because once you know that the high and the low of the day is a liquidity, your stress drop down to 50. So yeah. So this is the high and this is the low of this day or previous day now for us to use for today. But let us see how market works out today. So you could see market break out on the previous day like this. And like I said, if market break out and come back to the support, breakout, it can be a support or it can be a resistance. So while breaking out, we could see that another, you see, this all this liquidity area. No matter how long it is been staying there, it's going to become a liquidity next time. Come to your side, you see some low or previous day that was rested. And so market break out of your previous day here, right here. When market break it out, So you're expecting market to come back here for another entry. Market did not, but there's a way you can be in this buy, but that one we did not put it in this circulation. But what I want to do, like market just open and take the high and continue. So it's very, very happen. So in this scenario, there's a way to be in market. Market creates some high, low, all this pullback, all this one we call them minor liquidity. Market came back, claimed some one, break it above, use this FF value to continue. So remember, there's another high of the day that was rested also. Market break it also. You see, this is not convincing enough to buy, but market break it, come back, retest it, and go. It's not convincing enough. So but that's how market, just know that how market do. If the trend is strong, break out of a previous day, come back there, resist there a little, then push up. So that is, let us do another example and call it until the next time. You cannot finish it in a day. So we have another low. Okay. Yeah, of course I'm right. Another low and right here. So what do we see here? We see market just open like this, break it above, come back inside. This one do not sweep. It break it completely and come back inside. Come back inside. In this scenario, when it break out completely, it's telling also that I am ready to go up. It's just like market break structure to other side, come up. In this scenario, what you want to see is either market come to the breakout, do some dirty work, and continue, or you allow market to come back. It's just like market sweep and come back inside to claim more liquidity, then change character again for you to buy. But if you can remember, this high was actually come from this daily high that was taken yesterday. When it was taken yesterday, I said market come back there, but it did not convince enough for a buy. But it came back there, and this sound convinced enough. Comes there, change character up, come for the entry, then it moved. So as you can see now, so everything I showed here is not that about the trading, it's not about the entry. It's about that for you, once you open your chart in a day, just know that the high and the day of that previous day are the major liquidity for you to target or allow market to take one place before you find something to do. And any other low high that was created any other side, they are all liquidity as well. Just know that those areas are the major liquidity. Then your problem about liquidity will be solved little. So don't forget to subscribe, like, and comment as well, share, and ask any question about this. So this, you can use it for your normal strategy. Just know where the liquidity actually rested. So enjoy the rest of your day, anytime, anywhere you are in the world. Love you guys. And remember what I said about what this thing needs from us. Two things. Actually, one thing. Can we do one thing million times? As long as we're ready to do one thing million times, you have nothing to worry about.